This content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by Draper Gorin Blockchain, aka DGB, the presenter, or other associated parties for the content being provided. Please do your own due diligence and seek proper counsel.
And good morning. This morning, Juan is not here, so it is just me in the world of DeFi. Anyways, I'm going to probably have somebody else come join me on our team. If you're in the community and you already have a link, feel free to come join me. Otherwise, figured I would get back to crypto and talk about crypto and DeFi. Anything else? So some of you who have listened to me talk before may be bored. I'm happy to respond to questions that I find in the chat. So if you do have questions, feel free. Greetings to Amelia, one of our awesome watchers who watches our show all the time. We do appreciate that. Amelia, if you have the link, it'd be awesome to have you join sometime. Be awesome. So anyways, I was going to kind of prepare some stuff. I have a screen share, so if you see me looking at the screen, it's because I am looking at it in another window. Some would call me a degen boomer. So I thought we would play with some stuff today, just because we talk about crypto all the time, but a lot of times we don't see some of the benefits of it. And I really like explaining crypto to people, giving tutorials and helping see some of the actual use cases as to why am I so excited with crypto. And so I'm hoping to be able to do that just a little briefly in regards to some of the things that we'll talk about. We'll see who else might come join me. So anyways, right now we are looking at a screen of Uniswap. If you've been in the crypto space at all, you've probably used Uniswap at some point. I still find it funny that I'll talk to a lot of people who are in crypto, and unfortunately the people who are in crypto will they still think that being on an exchange, like a Coinbase or a Kraken is being in crypto, and it really, as far as I'm concerned, is not. The wonderful world of crypto is super awesome, but it's also super scary and super transparent. Because of that, like, people really need to know good hygiene, right? There's things like hardware wallets. Treasure has one, Ledger has one. Actually, fascinating enough, a company, I think it was Block. Let's see, what was the company called? I think I have one right here. You may have seen these advertised somewhere. BitKey. BitKey is a newer hardware wallet. Oh, you can't see that. BitKey. And so these are actually kind of cool. You got these little BitKey devices, and these are interesting. I haven't played with it yet. I always play with new technology. Anytime I see a new hardware device, I kind of want to check it out, see what it's like. This one is like a multi-sig that's connected with the cloud. I'm a little hesitant about some of the things like that, but I co-host a local crypto group, so I do like to test products and check stuff out. But anyway, I like hardware wallets. And if you're using a browser wallet like a MetaMask or a Rabby, I often recommend utilizing that in conjunction with a hardware wallet. Been a fan of Treasure and Ledger for a really long time. And so you'll see in what I'm doing today, I'll likely be using a hardware wallet in conjunction with what we're doing. So if I'm off to the side doing a transaction or process something, that's why, is because there's a hardware wallet associated with that. And why do I do that? If you'll see I have like Rabby up here. If you're been in this space long enough, you will have heard of various people clicking on various links and all of a sudden having a transaction approved that probably shouldn't have been approved. So anyways, this is probably I may end up having to take something off screen. Actually, let me just do this a different way real quick now that I'm thinking about it. We're going to do this real quick. I apologize. apologies. I'm just going to share the screen slightly different format. We're going to do a window. I'll do a window. Will this work? Let me just tab this because I also might want to show some stuff. Okay, cool. We can still do it this way. And I think that doesn't pop up my, just wanted to make sure it wasn't popping up my my wallet, the wallet. So yeah, you won't see that. So, okay, so we have a couple things here. This is Uniswap, as I said. Some other things that you can use. I like using Uniswap just because it's been around for a long time. Another just a real cool site that I like real quick is DeFi Llama. DeFi Llama has a lot of great information for those who are trying to learn more about DeFi and the crypto space. Just in general, it's a really good go-to for a lot of good information, doing research. For example, one of the things I like to look at is fee revenue. So fees and revenue, if you're looking at protocols and doing comparative analysis on that, I look to see one of my favorite metrics, if this is coming up, is a holder revenue. And usually what holder revenue is a revenue that's distributed back to the holders of the token. For some reason, this is going really slow today. Actually, here it is right here, fee revenue. So we have it down here, just below the charts. And so we can see over a 24-hour period, this was the amount of revenue that was generated and returned, or revenue to, that's just amount of revenue in 24 hours. This is not the one that was showing the revenue returned to people. I was kind of looking at this one, and for some reason, I'm not seeing where the slider is. Usually there's a slider here that lets me see more information. Maybe they've updated something on this site. Okay. Yeah, something's going on with here. I'm not sure. Okay, holder revenue. Okay, it's just updated. Okay. So we can see right here, holder revenue over 30 days. PancakeSwap has generated $48 million. That has been redistributed out to probably those who are staking. I don't know. You have to go and find that out. But these are like some of the things, the metrics that I look at when looking at various tokens, various projects. None of this is financial advice, obviously. But so there's just a lot of great information. The other reason I like to go to DeFi Llama is DeFi Llama also has, if I'm looking at it correctly, where is it at? DeFi Llama Swap. And so what's fascinating with DeFi Llama Swap is DeFi Llama Swap actually will aggregate, will send, no, I don't want to do that. How come it's not like picking up this? It will it will route transactions through various sources. So like, for example, if you're doing Sandbox, or let's say you're going to do sand, right? You want to move sand around. I'm curious as to why it's not connecting. It should be showing you a whole bunch of different, please make sure you check URL careful, okay? For some reason, it's not updating. Well, usually what it does is it usually shows you a group of platforms. Okay, here we go. We're loading now. So this will actually show you where some of the best places will be to go through, and it'll actually, you can actually select where you want to send the transaction through to try to get the best return. So you can kind of see what price is giving you the best price for your liquidity that you're swapping. But what I thought I would do is today was kind of go over one of my favorite things, which is liquidity pools. And if you have questions, feel free to ask. Anyways, and if you want to join me, like I said, you have a link already, feel free to join me. In regards to liquidity pools, because some things have changed a little bit since Uniswap came out, they have what are called V4s. So I've been in some of these V3s. A lot of my stuff is kind of out of range because I created a long time ago. But what we can do is we'll create a sample. I actually loaded up some funds in here. I don't know if we'll get token off the top of my head, but what we'll do is we will go create a new V4. Just kind of give you an example. And then what you're going to do is you specify the chain. I happen to throw some money over into base chain. So we can go select base, and it'll show us, okay, so we have some USD here, and then we have some base. Looks like we have some ETH in here. So let's just select this. And let's go select something. All right, and this can be done with any two tokens. What you'll do is you'll select your fee tier. Right now, this is telling us there's about 1.8 million in total value of blocks. So 63% of the liquidity is under at 0.05. You have, 29% is under 0.3. Obviously, when liquidity is going through pools, it's going to trade through the lower APY that you see here. Just because this is the fee rate that's being charged on the trade. And so obviously it's going to go to the lowest fee. Honestly, sometimes you'll see if going to a lower fee, as long as you're predominantly the main liquidity there, you may actually see more fees generated just because of higher volume going through. Usually you don't want to create a pool though, unless you have a decent amount of liquidity. Otherwise you end up being slippage between the trades in that liquidity pool. So it is good to enter a pool that already has some liquidity in it. So in this case, we're just going to select the 0.05 to show you this case. And just hit continue. Now, right now by default, it's showing us an infinite range. So, the price of Ethereum being 0 to the price of Ethereum being infinity. But the thing is in doing that, there's some good things with that. That means you will continuously, obviously, produce fees because you're in an infinite range. But the problem is the fees that you'll generate will be very small because that means your liquidity is being stretched out across that entire span. So with that being said, really one of the benefits of the V3s and the V4s is what we call, so V4 has another thing called hooks. I'm not really going to go over the hooks because it's kind of a more complex subject and I haven't really played with them much yet. But V3 started introducing these concentrated liquidity pools. And so we have this thing called a custom range. And so if we go to a custom range, what we can do is we can go and look at where Bitcoin has been trading. So I don't know if this is on the daily. Let's see. This is the daily chart. We can go to the monthly, and we can look at it yearly. So the yearly, if you just wanted to set it and forget it, you could go like this. Specify a year. That's probably about the range. You can actually see where a bulk of the liquidity is right here. So this bar on the right is showing us where basically the concentration of liquidity is and how it's spread. So you can see there's a large concentration of liquidity right here, and then it kind of spreads out either way. But like if you were to go through and set something like this, this is a range, and through this range, it allows, it would basically continue trading. I'm going to invite my buddy Nate to come on stage, and maybe Nate can ask questions along the way. Nate, we're talking about concentrated liquidity pools.
There you go.
That's why I talk about bets.
I love it.
I was just going through and explaining what a concentrated liquidity pool is and kind of how this works. And so right now we were showing USDC and ETH. The pink on the right again is the liquidity that's there, kind of the depth of the liquidity. So actually, what's interesting is we can highlight any section of this and we can see the depth. Actually, that looks like the price there. That's the price. Is that 3.7? That must be the price. And then liquidity dollars. Oh, this must be inversed. That doesn't make sense unless this is the depth of liquidity. Hold on. What we can do is we can also flip this over. So we flip it, and it says the other thing, the other way. Okay. So this might make a little bit more. No. Okay. So this is the depth. That's the liquidity depth right there. Okay. So this number right here is showing us the depth of the liquidity. So when we see 3.6, that's $3,600 in liquidity depth right there at that spot. It was like. So that's interesting. It would be nice to see what value. So I probably want to look at it more like this. There we go. And so real quick, while we're here, what I'm going to show is if we're going like this, and right now ETH is trading below this bottom line.
Right.
What we're gonna notice when we go to create this, that we're gonna be 100% ETH, and we're gonna be no dollars, right? Because we're above where ETH is trading right now. And so what that means is as ETH goes up, it will dollar cost average out of the ETH until it gets above the line. And inversely, if we were to go here and we thought ETH might be falling and we parked in 100% dollars and we wanted to go in dollars right now, we would go here, and if ETH fell, it would dollar cost average into ETH. And basically, we won't collect any fees until it enters into the pink space. If we wanted to be active right now, what we would do is simply stretch that up, and we would have a balance, and then we would have some type of range or combination, as we'll see down below. Because you're doing that, you're entering a range of a certain, a balance ratio of ETH to dollars.
Sort of going from SDC into ETH in that range, or opposite?
So what? Well, so right now you're in the middle, right?
Yeah, right.
So right now, this is representing, this point right here, this dotted line, is representing some mix of dollars to ETH, right? And as we can see, it's pretty close to dollar amounts, $10 to 7.29. Right now, if I drop it down below, we're going to be 100% dollars, right? And then it won't. This pool won't trade until it dies below this. Vice versa, if we're above it, we'll be 100% ETH, and it won't start trading until it gets into the line and the price of ETH.
So it gets into the line.
Yeah.
Right.
And so I'm really looking forward to when this happens with stocks. We're all sitting with stocks, in our portfolios that just sit there and don't really make us a return unless we're selling options, selling covered calls or puts or whatever. But this gives us a way, and I like to explain this to TradFi, that this kind of gives us a way to actually utilize our liquidity without actually having to do anything, without having to worry about expiration of options. We just park liquidity, and as long as we're within the given range where we think we're going to trade in, we'll just continue to collect fees.
Well, speaking of trading, did you touch on when you first got on that Coinbase is seeking the green light from the SEC to offer tokenized equities?
Yeah, that'd be fun. That's going to take a long time,
right? Yeah. I mean, they're approaching them. They're approaching the SEC to see if that's something they can go ahead and do.
It's going to happen at some point. They're going to have resistance.
Do you think it's a positive or a negative to offer tokenized equities and have the SEC a part of it? Doesn't it kind of help the crypto and blockchain?
So here's the thing. I am totally down with people owning shares, and the old concept of having paper shares where you physically possess and own physical shares. And most people don't realize that these days you sign over your physical shares to the institutional system, and you basically are owning shares in what's called a street name, which is the name of the broker, and that's all to facilitate digital, like electronic transactions. And so it's to help speed it up. But we're entering a world where we may not necessarily no longer need that, where we can actually have a digital version of it, and now you can own a digital version of your shares. And so my thought process, and then this is going to bring up, what it's going to bring up is issues in regards to voting, of who has voting rights with shares. But what I really like is the idea that we're taking those shares and depositing in concentrated liquidity pools and being able to get value and do stuff with our shares. Now, as I was saying, that does create issues, because if all my shares are in a liquidity pool, that means they're not in my possession. So the question is, do I still have voting rights, right? Or now does Uniswap have my voting rights because they own the liquidity? Well, and that technically they don't. Technically, I still own it. It's in a smart contract, but that's going to bring up questions that haven't ever been addressed, right? Right now, when you go buy an ETF, when you buy an ETF, BlackRock actually owns the underlying shares, and BlackRock has the vote if it's a BlackRock ETF, right? Like people don't, if you go buy the SPY, you might have price exposure to all these stocks, but you don't actually have the voting rights of the stocks that are within the ETF. And so I think this is going to bring up new challenges or different challenges in the space. But the thing is there's a lot of people who own maybe 50 shares, 20 shares, 100 shares that don't even vote, right? and so it's going to be okay. So it's going to be fascinating to see what happens with that. And it's evolution of the process.
I think the SEC is going to get more and more involved in it as you keep just going, over time, because they're going to want more control on, what is allowed and what's not.
Yeah, I think it's just, the wonderful thing is it's all transparent. It's all transparent.
Right.
In regards to transparency, I brought this up. So here's a wallet, right? This is a wallet address. This wallet address has 68 million DeFi whale. That's what they go by. You can literally look at a wallet address and see everything that a wallet is doing. You can see every liquidity pool that they're in. So I do think there is a way to do the voting thing because, you could see clearly that who owns the assets that are locked in that liquidity pool. And so you could give them voting rights based off of a snapshot at the time of how much they owned at the time of the liquidity pool. Now, can that change? Could somebody go buy a whole bunch of liquidity all of a sudden? Yeah, absolutely. Somebody could spike the price of stocks and then influence the vote. We can still do that today.
GameStop literally did that, a couple of years ago.
Well, no, I don't think anybody manipulated the vote, but I'm suggesting.
They didn't manipulate it, but they did manipulate the momentum on terms of buying or selling it.
Yeah, well, no, okay, yeah, that's a different thing, though. But I'm saying, theoretically, if you knew an option on a stock was coming out, you could go buy a whole bunch of shares to then influence the vote. But the thing is the amount of money of doing that isn't necessarily always worth it, right?
Oh, okay. I see. Yeah.
But I love the transparency of blockchain, especially in a world where politicians, are trading ahead of time, and you don't get to know about things until 30 days have gone by and all that stuff. When you can literally go and look and see that transactions are instantaneous, and you can see, that this person did something 9 hours ago. That is pretty awesome, right? And so I look at a world in the future where you don't just sit on your Tesla stock. You put your Tesla stock to work and you have it just sit there providing liquidity, because everybody has a price at which they're willing to sell at, and everybody has a price at which they're willing to buy more of, right? And so if you know those prices, let's say no matter what would the price be on this? So if I did this, right, the price right now would be 25.52 at my bottom of my range for ETH. This is on ETH, and then the top price would be 3,655. So now my average price that I would get would be some average of those two numbers. But let's say I'm fine with that. Let's say, hey, I want a DCA out of ETH, but by the time it hits 36.55, because I don't think we're going to go any higher than that, I want to be 100% out of ETH, right?
Right. Yep.
Somebody could easily set that up. And now if that's a Tesla stock and says, hey, I want to be out of Tesla stock at, when Tesla ever hits $1,000, hit me out of there, right? Then they could set that up ahead of time and be out. But the nice thing is while they're in the range, they're collecting more Tesla or they're collecting more dollars. In this case, you'd be collecting more dollars or more ETH, right?
Correct.
So let's do it for fun, just because that's what I decided I was going to do today. So we'll go like this, and let's just do a tight range. Let's just look at a week. It really looks like it's getting ready to set up the fall. Out of range. Come on. Let's get back into range. Okay. This will be fun. We're going to do right there. And we'll just go right there, I guess. That seems like a good range. All right. So I'm going to put, I guess I'll put like 10. I brought $10 over, so we'll do the $10.
Perfect. And for those that don't know, what makes Uniswap in terms of its platform? What do you like most about the platform? Just the functionality. What do you like most about Uniswap's platform? The functionality of it, or like the simplicity of just how you can go ahead and
like
set up
building liquidity
pools?
I like the liquidity pools. It's fairly easy to figure that out. I think you could actually do a liquidity pool through Sushi as well. I didn't bring that much ETH over, I don't think. So that might be a problem. Yeah, I'm going to need more. Well, we'll do this way. I have more dollars in this wallet than I have ETH. Do I have, is that enough? That's enough. That's enough to create one, it looks like. All right, let's do that right there. I don't think it's going to fall that high. I have a feeling that ETH has a better chance of going up than going down.
Then the other thing too is, do you ever do, or is it possible? I know this answer, but I'm asking for the people that might be just viewing right now.
Mm-hmm.
Can you ever set up a liquidity pool between, or it's trading between 3 different aspects? So like, let's say USDC, ETH, and Bitcoin.
It's because I talked to you about that a week ago. Yeah, we'll talk about that in a second. Let's make this liquidity pool real quick. Okay, so I'm just going to go between $2,000 and $3,000. That seems fair. We're only going to do, because I have a limited amount of ETH in this wallet, I'll put $4.95 in there, and we'll get us $5. Okay, so I'm going to hit review.
Yeah,
it's going to create it. It's showing us what we're doing, and I'm just going to say create. And I got to go grab my little wallet. So for those that can't see, there is a transaction that popped up here that shows me spending the USDC, giving me, asking me how much do I want, am I authorizing to spend? So I'm going to modify that and say, yes, I do not want to spend all my money. I want to spend a limited amount. And then it's telling me the transaction cost. I'm on base right now, so it's 0.25 of a cent. So it's 0.0025 cents, so less than a penny to do this transaction. And I'm hitting approve. A window has popped up to just approve the wallet. Because as I mentioned in the very beginning, I recommend people using a hardware wallet anytime they do even a computer transaction. So I'm going through that process right now, which is entering a passphrase and all that stuff, and then approving this transaction on a hardware wallet, which is why I'm looking down. And now that transaction is approved. And then, so now what we're doing is we're waiting for it to sign. The first you're assigning the approval and the spend, and then you're going to be signing up the approval on the creation of the concentrated liquidity pool. And so now I'm just approving that message and being like, yes, this looks good. Approve. Going through the approval process. And then we'll see exactly what it looks like. Okay. So now I've confirmed that transaction. And it looks like there's one more. And confirm. And this is another 0.0087 cents. So we spent about a penny doing all this. And it's showing me that I'm depositing USDC and depositing ETH. And so as long as there hasn't been major slippage or change in ETH price in the process of doing this, it should go through fine. Verifying that and then approving that. Awesome. And so now we'll see that it's approved. All right, so the position is getting ready to be created, as you can see on the upper right. Oh, it said creation failed. So we probably had some slippage or something in the process. Warning, error encountered during extraction. Canceled. All right. So now we got to go find out what happened. So that will happen once in a while. Not a problem though. You just go create it again. If you're too slow at doing it, or there's not enough money, or there's a slippage, you will often get that issue and whatnot. Or it could just be that Uniswap's being a butt today. That's an possibility too. Let's do custom range. We're just going to go through a hell of a lot faster this time. 2,000. 3,000. Okay. That's fine. And we're going to do $5. Yeah, see, it moved. It originally was 0.02. Now it's 0.018.
Right.
Just because of that slippage in it was enough to kick it out because it's already moved too much. So that is one of the problems that you may experience doing this. So you notice I have less approvals that need to be done because it was already approved previously. So now I'm just doing this.
Go ahead and automatically do that for you.
Yeah. All right. So it shouldn't have moved in the time period that we did that. I did a little bit. See, 0.017?
Yeah.
It was already moving. Okay. Wow, it failed again.
Too much movement. So too much movement in the liquidity pool as you're going ahead and setting up your own.
Well, yeah. So part of the problem is that we're not doing a large amount of money, probably.
Mm-hmm.
And because we're not doing a large amount of money, and because our range is fairly tight, there's so much movement in that small amount of range. Bet you maybe if I do it tighter though. These are the fun nuances of DeFi that can be a pain in the ass sometimes. I'm kind of curious now though. Let's go. Maybe if I make it tighter. How do you find bugs? Okay, I don't want to do it that way. I want to go this way. If I do $10, what happens? That's too much.
Now, when it's popping up and it shows red right there, what does that mean?
What do you mean?
That they won't allow you. So, like when you just did that in the ETH section, it came up and it highlighted everything as red. You put in the $10. Means that it's out of range.
Hold on, let me just focus on this real quick. Okay, I think that's good. We're gonna try this and see if this works. Create. Okay. I hope this works this time. It could just be an issue with Uniswap. I've had issues with Uniswap before too.
Is Uniswap your favorite platform?
No, we went over that a little bit. I use a whole bunch, but I was mentioning a platform called DeFi Llama. That's kind of fun because it allows you to go through multiple sources. I think there's some additional fees if using Uniswap too. Let's see.
And you said you like sushi as well.
Okay. It created it. Created the position. So we got in there. So now if I go click on base, we're going to see the positions there. We'll see that we created a pretty tight position, right? It's already telling us 28% APY. I'm curious on that. If we go click on it, we'll see it's already starting to collect some fees. Right? So I put in $10 a USDC, and it's starting to buy up some fees. So if ETH trades in this range, it's going to collect fees. So I'm probably going to be quickly out of range, or quickly into 100% ETH, either way. But as ETH trades right in this range, I'll make fees. And so you'll see the fees will add up here, right? So right now I've earned a little bit of ETH. And I can go and collect fees. And when you go collect the fees, this is what it looks like. And then you just go collect the fees. So. And then if you want to remove liquidity, you simply just go here and click remove liquidity, and you can specify how much liquidity you want to remove. And whatnot. So kind of cool. You were asking about doing a multi-collateral pool, though.
Right, correct.
And the multi-collateral pools, there's a good site called balancer.finance.
Okay.
Balancer.fi. And they've been around for a long time also. But what's interesting, they have pools already. And it's been a while since I've created any pools out here. I've been part of any pools. You'll see that there already are free try pools out here.
Oh yeah, I see one right there. Yeah.
And what's really cool about this site is if you want to add liquidity, you can add single liquidity single-sided. So if you had $100 of Tether, you could deposit that, and it will rebalance it for you in the process. Awesome. But even though there may be slippage in doing so, so there's some risk with that. But what is cool about them is you can also go and create pools. And so they have the ability, like here you could create a USDT, wrap Bitcoin, and stake ETH pool as an example, and then go through the process of creating the pool. This pool right now would be created on Ethereum. I don't know if they allow it on a whole bunch of L2s. And it's not necessarily cheap to create pools. And usually if you're going to create a brand new pool, your person's going to want probably at least $20,000 in liquidity in order to facilitate trading. Otherwise, it'll just be too much slippage. But very, very fascinating. And I think they utilize a platform called CowSwap for a lot of. They use CowSwap has some association with them somehow. I think it's called CowSwap. That's another trading platform or another decentralized DEX. So if you have a deep amount of liquidity, I think they kind of use I think they use it more like a limit order or DEX. Like they try to match up liquidity with each other to help facilitate larger trades. So
so CowSwap would be perfect if you want to do larger trades versus Uniswap. My balancer is a little bit different.
Yeah, Uniswap you can tend to be front run a little bit more.
Okay.
But yeah, there's some things and mechanisms here that I think that are more helpful for larger trades on CowSwap.
That's good.
Yeah, I haven't used it much yet. And the individual would want to do obviously their research before using it. I just know some people use CowSwap for that reason though.
Okay.
Then there's another popular one like 1inch. 1inch was real popular during the day because 1inch kind of allowed limit orders. I think this is it. Yeah.
1inch allowed limit orders.
Yeah. So let me go find 1inch. 1inch. 1inch is another popular one. 1inch.io. Yeah, that's it. So 1inch.io.
Yeah.
I'm not going to be allowed to use it because I think you have to be. I don't think they allow US. Maybe that changed. But if I remember right, yeah, there's a limit order feature here. So you can tell it, I want to sell my Ethereum, but I only want to sell it at this price. Specify the time. And then basically what you're doing is you're approving the spend in your wallet ahead of time. So that way, when it hits that price, you can execute the trade.
That's nice.
So it's kind of a cool feature.
Yeah.
You are giving approval to a smart contract to perform the functionality.
Yeah. So there's risk in stocks anyways with normal limit orders.
Yeah. So yeah, very common. I mean, most of the stocks that I ever buy, I use limit orders to buy. So I mean, it makes sense to do it in crypto. But it's just one of those things that a lot of people don't recognize. So we can go back and look at this. Let's see if it's done anything if I refresh it. So we can see that it's slowly earning.
Yeah.
So we've earned, 0.1 of a penny.
Yeah.
Which, over a couple minutes, that's not too bad. And shoot.
Making money work for you.
Yeah, making money work for you. And then that's only with a little bit of $14. And it says our supposed APY, APR should be 28. Now, realize as soon as we go out of range, like we're not going to be making money anymore. So as soon as we're up here or we're down here, this will be completely out of range and won't make any money. Nice.
And that's the point of a liquidity pool, is that within a certain range, you're making money while it's actually performing.
Well, that's why it's called concentrated, right? That's why it's called concentrated liquidity pool.
Absolutely. Absolutely.
So yeah, so it's like, I'm a big fan of using TradingView. So it looks like
I love TradingView.
Looks like I was using Beefy, so let's get rid of this. So I was looking at Beefy and Tether, but a lot of times what I'll do is I'll go through and I might let's say I want to provide liquidity, and I was going to do liquidity between Beefy and let's say an Ether, right? An ETH. So what I would do is I would go like that, and I would go ETH in the USDT. So that way USDT is the stable pair that's going to make these two relate, right?
Yeah.
And so I would select that, and if I do that, and I hit enter, we now get a ratio of what. So I have Beefy USDT divided by ETH USDT. So by having two different tokens pegged to USDT, what we're now is essentially that USDT cancels out, right? And so now in theory, I'm getting a ratio of what Beefy's price is to ETH, right? And so now I can go and look, okay, well, what is Beefy doing against ETH over the long term? And then what I can do is by knowing that, I can go and specify a range or a ratio.
Correct.
Which has been really small on this because it looks like it's staying within 0.1. And that's really because ETH is so much more expensive than Beefy. Not only that, the other tool is, let's say, so in comparison, if I go to Beefy, because that's what we're looking at in that chart. If I go on Beefy, CoinGecko also has the ability to click on ETH and see prices in terms of. And so we can see that's 0.058, which is a little bit more precise than what TradingView is showing at the 0.1 range, because we're obviously below 0.1. So it would be nice if it showed me a better diagram. This is probably 0.5, 0.05 somewhere, based off of this being 0 and this being 0.1. And I'm sure there's probably some way for me to change my labels on the side. I just don't know off the top of my head. You use TradingView. How do we adjust the labels over here? Any idea?
Yeah, I like TradingView. TradingView is probably one of the ones I use.
I don't know how to adjust the labels on the left.
See those labels.
Check out
At the bottom
MetaFi.
right.
It will make predictive ranges much easier. Yeah, there's a couple sides. I haven't seen that, so let's go look.
Yeah.
Metafi.io. We'll look at that. Metafi, huh? Interesting. I don't want to connect my wallet just without taking a look into it. But finding ranges. We'll have to take a look at it later. There was another one called Uniswap Fish or Fish. Uniswap Fish. Was it Fish? Poolfish. Yeah, it was Poolfish. Changed its name. Yeah, I don't use it, but I've used it as a tool. What's cool about this one is you can go. Come on, ETH. Okay, maybe this isn't very fast on here. All right, let's not do on base. Let's do it on ETH because it should go faster. There we go. So you can go and specify the tokens.
Mm-hmm.
Go calculate, and it'll show you a range, and then you can actually move the sliders on this to get an idea as to what the rate, the amount that you're going to make is on that. Then what's fascinating is it also shows you existing pools that people have and what their APR is. So fee APY on this has been 349%, right? And so we can actually go click on that liquidity pool, open that liquidity pool, and actually see the liquidity pool that somebody's created. And it looks like they pulled funds from this. So this is, oh, we're on base. Hold on, we're not on base anymore. Let's go to, we are on ETH. Okay, so let's go to pools. Why did it? Oh, I know why. Because we are on base. We want to be on the Ethereum chain. All right, let's go do that again and see if that opens up right. Okay. So this is that pool that we found over here on Poolfish. And so we can see based off their chart. Max price, min price. Let's rotate this. Can we change the way that this is looking at? This is looking at ETH in terms of dollars. Here, let's do this way. Okay, that's better for me to see. So this is looking at the min price of 21.82 to the max price of 28.58. This is the current market price. I do not know how long they've been in this pool, so we really don't know what the long-term APY is, and it will reset the moment they take fees out. But on this amount of money, they've made $160. We don't necessarily know over what period of time, though.
Right. So when it says position, go ahead.
No, go for it.
So when it's saying position, that's what they put in?
Yeah, this is what they put into the pool.
Got it.
And so off of that pool, they've so far made $160. I don't know. The problem is I don't know over what time period it is.
Right.
But based off of the APY, they're factoring that the return has been that. The problem is the moment they harvest and do a withdrawal, it will reset the APY.
Yeah.
So return on investment is 0.06. So, okay, the fee APY might be this, but the return on investment is smaller. This is kind of fascinating. 393% with a large fee APY. $8,000. Let's go look at this one. Oh, they exited the pool though. We'll look at that though. So, and this is probably out of range. See, so right now it's out of range.
Yeah.
But they were collecting fees. Yeah, we can go like this, and this is the range that they did. So, I mean, so what's really cool is, utilizing a tool like this, you can kind of play with various ranges to get an idea, an estimation of where the fees might be. And then you can go look at what other people are doing to see what they're making. So, like, one of the ones that a lot of people aren't aware of is, and this is what I like to do, is let's change this pool real quick. So there's wrapped Bitcoin. But then there's also something like TBDC. And so both of these are Bitcoin. And so what you can do is you can go like this. And so because it's Bitcoin and Bitcoin, you would typically make the ranges much more tighter. So you could do a range that's 0.99 versus 0.01 type of thing. Right. So we got a tight range, and you'll basically collect fees. Now, if you notice, let's say, okay, this is in terms of BTC, I think. Most active price assumption, we're going to put it right in the middle. That's fine. That feels a lot less. So 1 cent. Let's say you're going to put 10,000 on there. So you'll make 8 cents. Right? But the thing is realistically, you're making it in terms of Bitcoin. Something about this doesn't feel right. But I guess that could be right.
That's 8 cents a day you're making?
Yeah, 8 cents a day over 24 hours. Yeah, 8 cents a day. Yeah. But you're making, the thing is, you'd be making it on Bitcoin. So now if I scroll through here and we see some of these, this person's apparently making 11% APY and fees off of Bitcoin. The return on investment is 0.02. That's okay. That one's looks like a closed position. It's out of range. Let's go find one that's in range. Is doing well. Okay. So this one's only making 3.45%, right? But it's making 3.45% on Bitcoin. The return on investment is only 0.12 though. But still, so if we go look at this pool, we can see that this pool has a range. It's pretty tight, looks like. It gets out of range once in a while, but majority of the time it's probably going to be close to the range. And they've collected $149, but if we look at it, they're collecting $149, but it's all in Bitcoin. Right. And so this is one of the things I like is they're putting Bitcoin in. They're getting two different types. Now, you have to understand the risks with it because WBDC is institutionalized Bitcoin, which means that you can't get the underlying asset unless you're an institution. Some institutions deposited money into WBDC with BitGo, and then that WBDC has been put on a chain on Ethereum, but it does absolutely represent the price exposure to Bitcoin. Now, TBDC is different because TBDC allows people to have deposits and withdrawal of Bitcoin into the Ethereum ecosystem. And so if you actually own TBDC, you can actually go back and exit Ethereum and go back to the Bitcoin chain with your Bitcoin. There is a fee for doing so, though. But anyways, yeah.
Okay. I was going to say, why would someone use a liquidity pool rather than just take that 100,000 and put it into Coinbase and Bitcoin or something like that?
Well, I mean, if you have Coinbase and you have your Bitcoin, if hopefully people are not sitting with their Bitcoin in Coinbase just because it's their Bitcoin, just like money in the bank is their money. It's a liability owed to you. If you have Bitcoin in Coinbase, it's a liability that's owed to you. Doesn't necessarily mean you get it. This is why we self-custody. People should self-custody. But the thing is this kind of situation, this allows people to maybe they have some extra Bitcoin that they're willing to risk. I don't consider this as risky, but they're putting their Bitcoin, their capital to work, right? So you can just let your Bitcoin just sit there in a wallet, or you can take some of your Bitcoin, as long as you trust smart contracts and you trust Uniswap, park some Bitcoin there as collateral and provide liquidity, right? So for my example, like I wouldn't encourage people. I wouldn't encourage people to go take their Bitcoin and go do this. Vice versa, what I would encourage is if people are already in Ethereum who want to have Bitcoin exposure, right, but they want to stay in the world of DeFi, that they may take some of their Ethereum, maybe buy some wrap Bitcoin or buy TBDC, and basically get Bitcoin exposure, but then also earn while they're having that Bitcoin exposure, right? So, like this person's earned $150 in Bitcoin by providing liquidity, right? Now, the ultimate goal of a lot of the crypto space is to accumulate more Bitcoin. And it's not necessarily, yes, having Bitcoin by itself is great, but a lot of it is also having the Bitcoin exposure, because if you're in the Bitcoin space, you believe that one, the dollar is falling closer and closer to zero. And with that, with the infinite money printing that we're going to likely continue to do, that we're going to continue to see the Bitcoin price go up. So any exposure to Bitcoin in the long term is good, right? With that theory. And so by doing this, by facilitating, because people are going to trade. Who knows why they want WBTC? Maybe there's somewhere there's a higher yield. Maybe the institution wants their WBTC. Maybe somebody wants the TBDC because they want to go back to Bitcoin, the native chain, because they want to go do an L2 on Bitcoin now. Who knows? But the thing is now somebody can facilitate the trading of that liquidity. Full disclosure, check with legal, check with your tax people, because there are tax and legal implications potentially from doing this. And everybody's in a different jurisdiction, so you should always, consult your local financial advisors, not financial advisor, but your legal and tax advisor probably. Because here's the thing, like anytime somebody earns, these fees are all taxable. As of right now, if you go claim the income, the IRS is going to see that as income. And so this is going to be treated as income. So people have to be prepared for that, because if you collect this income, let's say somebody harvested 150,000 right now, right? And Bitcoin collapses, and now Bitcoin is at, look, we just saw it go down to 149, right? That means Bitcoin's price went down. Well, if Bitcoin's price gets cut by half and you harvested $150, you're going to owe tax on the $150 that you harvested at the time you harvested, even if it falls to $75. So something to be aware of. But for those who are typically doing this, they have a long-term expectation for Bitcoin, right? They're doing this because they want to earn more Bitcoin over time. And this is just one means of doing it. Now, do I want a whole bunch of people to rush in and do this? Hell no. The reason I don't want it is because the more people are doing it, the more the fees go down, because the deeper the liquidity,
absolutely,
then the more we're sharing, that people are sharing. So yeah.
Right.
But this is some of the avenues that I think are wonderful, because now go back to we were talking about stocks, right? Tokenizing stocks. So let's say we were tokenizing indexes, right? So we know SPY and we know VOO. Okay, the SPY is the S&P 500. VOO is also the S&P 500. Both of them are issued by different institutions. But what if we did a concentrated liquidity pool between SPY and VOO, right? It's a 1-to-1. It should be fairly close. But there are people who are trading from SPY and VOO, and why they're doing that? They're doing that for tax purposes, right? Because I can sell one, take the capital gains. The problem is I can't buy SPY back for 30 days. And so what do? I go get exposure to VOO instead. So that way I don't lose my exposure while, dealing with tax stuff. So if I want to take a tax loss, I sell the SPY. I go buy the VOO. I took the tax loss on the SPY, but now I'm still holding exposure to the market, right? So there's these trades that happen. And so if you could be the guy who's providing liquidity for these trades on chain with digital stocks, and you're earning your fees in SPY and VOO instead of dollars, like, to me, that's awesome as hell. Right.
Right.
Now, I personally think the institutions are going to like, nope, we don't want people to do that, but we're absolutely going to do it. This is something that I see the institutions doing down the road going, wait a second. The institutions are going, wait a second. So we can just set up these liquidity pools, just have people trade through it and collect fees and have these shares and then do whatever we want the share. Like, how that would work with them, I have no clue. That would be kind of fascinating. But it's a whole different world when you can start earning shares of stocks or shares of tokens or whatever, just for providing liquidity.
Yeah.
It's an interesting world where we're going
in. I know we're coming up on the end here. Before we kind of log off, did you see how Scale AI is going to get bought by Meta? It looks like for about $14 billion.
Nice. No, yeah. I don't. I heard about it. I don't think I saw it happening yet, though.
So I don't think it's closed yet, but that's potentially what the investment might be. That Meta is going to invest $14 billion in the Scale AI. But the caveat to it is that Google is its biggest customer for Scale AI right now, and Google just announced, I think yesterday, they just announced that they're going to plan on splitting from them after Meta has announced that they're going to potentially be doing the deal with them now.
Oh, Google's going to split?
Google's going to, because Google is Scale AI's biggest customer annually right now. And what they're saying is because of Meta's investments, once it closes, Google plans on splitting from utilizing Scale AI, because then that's all the information now that Meta would be able to get on Gemini and utilizing it. Yeah.
Interesting.
Right.
Well, I'm surprised Google is not buying it then.
That's what I was interested about. Google didn't. I think they said they spent like 130 million last year. I'm not sure what the actual number was. Let's see.
Have a good day, Emilio. Yeah.
Yeah, it's not showing. Yeah, but it's interesting. I mean, we are clearly in kind of this new, not age, but we're in a new, shift right now with all the data AI.
You wouldn't believe on how many people I talk to that have no clue about concentrated liquidity pools or just liquidity pools in general.
Right.
Or just other platforms that are out there that do a lot of this stuff.
Yeah. Right.
So it's a fascinating world, and it's changing super fast. We finally have somebody in office who is a little bit more open to it. So it's interesting to see how things are progressing.
Yeah.
I'm not sure if I'm a big fan of his meme coins and stuff like that. But
yeah. No, that's got a crackdown coming from the IRS all over it written.
Well, not while he's in office. Wait till he's out of office, right? When he's out of office, the IRS will probably crack down on it.
And it's going to come. Yeah, absolutely. Yeah.
It's fascinating to look at some of these things, though.
It is. And even just, what we're talking about, all the, last year, I feel like all 2024, all you heard was the NVIDIA stuff and ChatGPT, right? And all the investments. And now what you're hearing is, all the data and where all the data and the AI LLM models are going and who's going to be able to access that data the most. And so, yeah, it's interesting. It's interesting.
I think we've spent what? Spent probably about a half hour. So let's say $14.31 times 100. So I think that's what. Is that right? Is that divided by that about 3.5% over 30 minutes? Am I calculating right? No point. Okay, so I made point. Okay, so I made 0.035% in the half hour.
Got it. Okay.
So, but if it continues to do this over a day, right? I'll make 0.85% in one day.
Correct.
Almost 1% in one day, if that's the case, right? Yeah. Now, obviously, I'm in a tight range, so I'll probably drop out of that pretty quick. But it just kind of shows people, I think, some of the possibilities of what the space is like, and what can be done in it. Pretty fascinating.
Yeah, and it gives exposure as to what other platforms are out there in space, right? I mean, some of the conversation that this is almost never a conversation in the news. Some of these types of platforms, right? You only hear the big stuff in the news, right? But I mean, look at how many other platforms are out there, and how many other avenues you can go ahead and get involved with.
So, for people who are watching still, great tax architecture. There needs to be great tax architecture out there. I don't think we've shown any tax architecture yet. The taxes is a nightmare, but yeah, for some of these things, it's cool. In regards to like taxation, one of the platforms I really like, since somebody mentioned it, is this platform called Beefy. And the reason I like Beefy is Beefy did one thing innovative that other people haven't done. And that is let's go all. I don't have anything here. Let's just say you were going to do Bitcoin, WBTC. I don't know what this exchange is, so do not trust this. Verify everything. Oh, that's an LP. That's not what I want to show. I want to show one that's not an LP. Let me just go.
Hey, Ray, can we have another question in the chat asking what minimum position must one hold to be considered an institutional investor? From Eric.
What minimum position must one hold to be considered an institutional investor?
Yeah.
In regards to what? I'm not sure if I understand that in regards to.
Well, I mean, if it's in regards to
if that's investing, in regards to what WBTC, that's talking to BitGo, and I think BitGo requires something like 100,000 per week investment.
Yeah.
In deposits of Bitcoin, but you would have to talk to them because we're not associated with them. But what I was going to show you, I don't like these because they're all CLM pools. I'm trying to find something that's not a CLM pool. LP. Here we go. Let's go to traditional LP. I just did that one. It looks like a lot of the traditional LPs are disappearing. Okay, let's click on this one. No, they're not doing that either. Okay. Well, that's disappeared. So I'll have to go back and find out. This one work? Okay, this is it. So one of the things that I like about this, even though this is a Bitcoin and Bitcoin pool, what was fascinating about this platform, it allowed you to deposit in dollars. So you could deposit your USDC, and then you could withdraw your USDC. So you could get Bitcoin exposure by depositing USDC and then withdrawing USDC. So even though you had Bitcoin exposure, it shows it in terms of USDC when you go in and go out, which is kind of cool. For tax purposes, it can be nice. Full disclosure, I do own some of the Beefy token and participate in some of the governance on that platform. I also own the Uniswap token as well. Full disclosure. So I own tokens in platforms I like to participate in and I use. Just like I own stock in companies I like to shop at. But anyways, yeah. So that's a bit of DeFi. So I mean, but I co-host a local crypto meetup in Sacramento, Cap City BTC, and this is absolutely the same stuff that I covered there, and I have been covering for the last 4 years in a crypto meetup meeting setup.
Did you show the green screen yet at all? Did you bring pop up yet? Just for if anyone wants to message us, we'll get involved.
Oh no, yeah, let's absolutely do that.
Okay.
So if you are building DeFi protocols, would love to hear more about your DeFi protocols that you're building. As Nate mentioned, you can reach us at, I'm looking for the media asset. You can reach us at the dgb.vc. So please come talk to us. Show us your latest and greatest DeFi protocol that you're building. And it could be pretty much, anything, because we're interested in anything. We are early stage. We like to invest in early stage startups. So the earlier, the better. Come tell us about your protocol. We have a whole bunch of other companies in our wheelhouse, in our group. And we are doing some pretty cool stuff, and we would love to talk to you as well. Hopefully everybody learned something a little bit about today in the decentralized system, and hopefully you guys enjoy that. Anyways, thank you much for joining us today, and we will see you next time.
Have a good one. Thanks again, guys.
Peace out.